Most far families aren't broke, they're land rich. And that's exactly why succession planning, when it's done wrong, can tear a family apart. Last episode, we talked about probate, what it costs, why it's slow, and why the kids can inherit a big bill instead of an asset. Today we go deeper. We're talking about the two main tools family use to actually solve this: trusts and incorporation, and maybe a combo of both. I'm going to help you understand not just what they are, but how they behave differently when it matters most at tax time and succession. And I'll use one family throughout the whole episode so everything we talk about lands in a real scenario, not just theory. If you ever asked, should we set up a trust or a corporation for the farm? This is the episode you've been waiting for. Oh, now I'm messing it up. Which one to use? Oh, God. I'm getting a little bit of an echo. Okay. This one doesn't work. Go this way. Can you hear me fine? Yeah, I think you can. All right. I'll have to deal with this echo. Technical difficulties here live on. Welcome back to Farmers in Finance. My name is Rico, and let's see if I can do this. I'm going to change the camera. Hey, no, look, there's two shots. Two shots of me. At this stage. How about now? Can you hear me? No. Oh, interesting. So that echo is only working on this side. Oh my God. All right. Can't hear with two. Oh, maybe you could have heard me. This is funny. Should have tested this out before. Okay. No, yeah. You can hear me. Huh. But I don't like the echo. All right. I'm going to have this camera onto the stage. We're going to go one. All right. Oh, sorry about that. Welcome back. I'm Rico. This is Farmers in Finance, episode 30. Wow. We come a long way, that's for sure. And now with these technical difficulties, I'm like caught in a little bit of a dilemma and I don't know what to see, follow. Which one is the camera? This one? Okay, yeah. That's the one. So, quick recap because we already lost 5 minutes and this episode is packed. I got notes everywhere. And I'm hearing myself echo. But okay, so last episode we just broke down probate, what it is, what it was, what it does, who activates it, who controls it. And it's mainly based on the will, right? So it's how the will passes on things in successions. But what happens when the taxman wants a little bit of your money? And again, the taxman always wants your money. Okay, so last episode, sorry, we broke down probate, why it's slow, why it costs, and the estate liquidity plan with the three buckets: cash, credit, and insurance. We didn't really go in depth too much, but at least we talked about it, and we made sure that everything was in place. That like what I'm trying to do here is give you knowledge and understanding on how to. Now I'm getting echoing feedback. Jesus. Hello? Okay, so I'm just gonna do this. Oh. I need to fix that. Let me see if I can remove one of the strings. Okay. Is it better now? Better? No. It's still getting this. Oh, goodness. Which one are we looking at? Yeah, okay. Okay, that's good. Maybe if I turn this speakers off. Now it's working better? Okay. Okay, cool. Okay, we're back. Okay, let me just pull up my notes. I'm using two computers because one of the computers like just crapped out on me. And oh, yeah, my notes are not on there. Oh, that's awesome. Perfect. So let's go back to today's roadmap. We'll meet the anchor family. The scenario we'll use all episode. The three things every family needs fast. And then trust 101, what they are, when they shine, and when they explode. Incorporation 101, what it does, why shares beat land titles and the trade-offs. And then head-to-head, one of each, how each one behaves at tax time and succession, the fairness framework. One kid farms, two don't. They want to leave the farm. The missing pieces, liquidity. And 10 questions to bring to your CPA and lawyer. So, having said that, this episode is just for educational purposes, like every other episode here is on Farmers in Finance. My name is Rico. I'm a real estate professional and also a financial associate. I love learning and I love teaching people the ways to save money to create financial freedom in their life. Having said that, we're not financially free until everyone is financially free. So my goal is to learn as much as I can. Like what Alex Hermosi says, I am paying my dues for my knowledge debt. And what I want to do is pay it back and spread the word on how to save and navigate this crazy ship that we live on, planet Earth. Okay. Quote of the day, like we always start with the quote of the day, and I'm bringing this one back. It's so connected with farming and everything like that. So, and learning and everything and starting something new and not being afraid of doing what you need to do in life and finding that purpose. So this is, the quote is from, I think, in an ancient proverb, or I don't know who said it. Anyways, but it's a good quote. The best time to plant a tree was 20 years ago. The second best time is now. So tie-in. Most family haven't started planting a tree. We're so caught up with the day-to-day, and we're just like trying to find our way through the navigations. I mean, like, we talked about it when I first started in my career in engineering. There was this idea that was 20, 30 years ago, and it was just one income was enough to support the family. I mean, I was doing engineering, but I don't know, it got too involved, and I was asked to go and help out with a deck, and that's how I became a contractor, right? And at the time, I was like, man, I can make enough money for me, my wife. My wife can stay at home. She can just take care of the house and do all the things that needed to do around the house, manage the finances, because every family needs an assistant. And but as the years go by, it's becoming more and more difficult because the inflation is causing two families to go to work and to slave away and barely making it, man. Like we have never seen. We're seeing like we talked about it last show. We're seeing the biggest financial transfer in history because the baby boomer are starting to pass on and leave their legacies. But also, we're seeing the biggest credit card debt ever recorded. And 50 years ago, there was no credit cards. So what's happening now? What are we doing that is causing all these pressures and stresses? And I mean, divorce, right? Like it's up at outrageous rates. And why most people separate? Is it because they fell out of love? No, it's just because they get into financial situations that they were never discussed, never talked to, never planned, and you know the woman thinks different ways. She likes the stability, and then the man likes the dreaming, the doing things, the airy air and earth meet each other, the four elements, right? And you need a fire to create that hot air motion. So anyways, I am going to diverge there and everything like that. And then I'm so confused because I have two screens and I'm not looking at the right camera. Anyways, but that's not nothing that matters for you guys online. Let's go to the slides. I got these beautiful slides that were put together by, I mean, talk about AI lately. It's an amazing tool, and it's creating slides that take five seconds. You just put the prompt in, and then boom, it comes out, and it's got a full set of slides. I would have taken hours to put together. Anyways, I love AI. So if you want to talk about AI, we can talk it on the side. My email address, a little plug here, is scrolling down below. So if you want to get in a conversations or you want to call me, there's two ways. You can scan the QR code up top. That's my website, farmersinfinance.com. Or you can reach me at ricardo@ricardomanazza.com or rico@farmersinfinance.com. And since I'm at it, for the plug for today is we can also chat on different channels. I'm on Facebook, which I'm live right now, LinkedIn, and YouTube, Financial Freedom with Rico. So please subscribe to the channel. Let's start the conversation. If you want more freedom in your life, this is the channel that we can discuss it. And it's open. It's not, I discuss, I like ideas. I'm open to any suggestions. It's a growth. Everybody needs to grow. We're planting this tree today, the tree of knowledge, onto trusts and corporations, and we're hoping that it will grow. So let's introduce the family. So this family has been land rich. It's got land. It's been farming for 30, 40 years. And it's coming to the time that we need to sit down and talk about who's going to get what and where is it going, who wants to continue, right? So they have 3 kids. The oldest is, let's call him Jake, and grew up on the farm, loves it, runs most of the operations now. And the other 2 built their lives in the city. They didn't want anything to do. They loved their gadgets, their phones, and they just wanted to get away the farm. But they love the farm. They just don't want to run it. So mom and dad want four things. Okay. Like any other farmer, they invested so much time and money. And over the generations, if this is like passed on multi-generational, their grandfathers wanted the same thing, right? So number one, they want to keep operating the farm. They want to treat all three kids, right, fairly. And then obviously they're starting these discussions, but they also want to protect their own retirement income. And then last one, but not least, and they definitely don't want the farm to split up the family. Having said that, is why would they think that the family would be split? Well, it's especially when kids have other interests, and like what we were saying before, if they don't want to farm again, and they don't want any investment into the farm. I mean, obviously they like it for hanging out, meeting their brothers and sisters. They definitely don't want to continue on, and so maybe they could put it on the table. Hey, we would like to sell. But as I was preparing for this show, I watched a lot of YouTube videos about farming and consultants and estate plannings and succession planning. And I was doing one of these YouTube videos, and it was about the succession planning. And I was like, okay, wow, like it's two different things. So estate planning is so that you plan to reduce the tax burden to your heir. And then succession planning is when you plan the full transfer from treating everybody fairly and equally, right? And one of the things that came up is the will. But when I was doing the research, I got down a crazy rabbit hole, and I did mention it before because it is stated, but it just never hits you home when you're really looking for the answers. But here, wills in BC, they can be contested. And I was watching this other YouTube video where it was throwing examples that when the will goes in, there's people that have never talked to the family members, but they have a say. They can contest the will, and then the probate goes crazy. And so one of the main things about the farm and continuing on is to sort of plan if there's going to be any disagreements, right? And bring them up to the table. So one of these guys was actually talking about sitting down on the table. And that was his most relevant part and goal, is to have a chat with the whole family, right? And have everybody sitting down and make it, like a funny thing. Yeah, we're going to talk about, what happens to the farm, and we're going to create this succession plan that it's going to be fair, not equal. It's going to be fair for everyone in the family. And I found it really eye-opening because it doesn't just relate to farmers. I mean, obviously farm families are a crucial part of our society. And unfortunately, it's not just the farm families, it's all the trades that do something, like because what I was watching a funny meme the other day, and there's a boat, and in the boat is there's a fireman, a policeman, a farmer, a doctor, and then there's a content creator. And then it goes, who would you kick out first? And then, I don't know if it's obvious to you, but yeah, like a lot of people are starting to be like in this this era of content creation, and 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 like even my kid. I'm not saying that it doesn't fall close to home, but it does. Even my kid is like, so what are you gonna do in life? And it's like, oh, I'm gonna create content. I'm like, oh, okay, wow, cool. Um, don't you want to learn any other trades or how to do other things? No, no. I love talking to people. I love doing these video editing. I'm like, okay, fine. But that's kind of like where the world is finding their cultural differences in society now. Like, what are you gonna say? He still has the capacity of creating a business, but in a sense, is that an essential service? And we were exposed about essential services back in the days. But anyways, that was just another tangent there. But it comes important, right? Like when we talk about uh, farming and businesses and families and what keeps the family together. I mean, these talks are so important. If you have a chance to have them, like, please do. Don't have them when it's too late. And I was bringing the example of my friend that it, it it's like if you don't have them now, those are going to be held afterwards when it's too late, right? When you're gone, or some important member or friend is gone, and now you're just like, oh wow, what to do now? And you're caught lost and you can't really think, and then you get into depression because it's not just because money problems cause a lot of different stresses, right? And it depends when they come in. But when they happen in parallel to a death, that's destructive mentally, emotionally, physically, because once the mind is gone, the body follows, right? So let's have these talks. Make it fun. Let's come up with ideas to how to make this, like something with a legacy, something with purpose, right? Okay, so where are we? When a succession event happens, whether that's death, disability, or retirement, let's not let's think about this too, right? Three things needs to be in place immediately, right? So when people retire, like, I mean, the farm, you're gonna one day have to retire, right? What happens if one of the key members gets in a disability? It's the same thing. What happens death, right? It's not just the death event. Oh, we don't want to talk about that. It's all these three are very important things. And then a lot of people don't talk about this stuff, right? And so what happens? Ask your question that, and like we tend to reflect when things happen to somebody else, and then we go, oh my God, I don't want that to happen to me. But let me tell you, things happen, okay? And they happen. I don't wish them to happen, but they do happen. So let's have this talk: death, disability, or retirement. So three things need to be in place: authority. Who can legally make the decision and act? Okay, so when it comes to death, that's the executor of the will, right? You give authority pre-given, right? Disability, well, you can, there's these documents called power of attorney. So you can give power of attorney to somebody before you go in a disability, whether it be mental, physically, or you're incapacitated on an hospital bed, or you're in a coma, right? And then retirement. Who's your financial advisor? Who are you giving the power to, make these decisions? You can take on those decisions as well, right? But the least decisions you have to make, the better for you and your levels of stress. So authority, clarity. Oh man, you got to be clear. You got to be knowing. And there's so many tools now that makes communication instant and so reliable that to have clarity, it's a lot easier, right? Even though we still get problems. And I mean, there's even translators now. We can talk to 106 languages simultaneously. I don't know if you've seen those new AirPods. You can put them in your ear and you can listen to all kinds of conversations. like what a technology we have. Like the boundaries are like getting smaller and smaller. We can reach people across the world. Like I was talking to a person in Greece this year. This week I talked to Greece, I talked to Italy, and I was going to talk to India, but and India is supposed to be on the show. But I'm just saying, like everything is there, it's boundless. So I don't even know why we're not in a crazy world of abundance, and it's actually getting more and more restricted. But maybe that's what it is. There's like the log curve where there's more and more freedom and more communication. There's an equal force that tries to push down to maintain equilibrium, right? And that has to do with energy and everything like that. So clarity is another one. And number three, huge one, cash. Without liquidity, you cannot pay for the probate. You cannot pay for all the legal fees. You cannot pay for the debt that is passed on too, because let's not forget that most farmers are already in debt because they bought assets to increase productions and to increase profit margins. So you need that cash, right? And it needs to be stored somewhere, right? And it needs to be liquidable, right? Like assets um, like property and real estate, they're not that liquid, right? So um, that brings all the three things that are required, or they should be required, in order to have a proper setup in a succession, right? Like these are the pillars for succession, and these are the things that need to be talked about whenever you sit down with your family or with your dad, depending on how big the family is and what this. But this is what my farm family is gonna do, right? We're gonna sit down. Um, okay, so let's go into. Okay, we're running so fast. Trust 101. What is a trust? What is a trust? A trust is it's like a legal container. Think of it as with a box with rules written on the lid, right? So you can't open it. Well, you can open it. You make the rules, and then whatever you put inside of it, whether it be land, shares, money, and corporation, whenever you take it out, you got to read the rules. And then if it fits the rules, you can take those assets out, right? So the trust is set up by the settlor, right? He decides, or she, it decides the rules of the trust, um, and sets it up. Okay. What was I going to say? Well, I'm just going to read the notes anyways. The settlor is the one that creates the trust and puts the assets into it. In a farm family, this is usually mom, dad, grandpa, or grandma, right? Like it's one that wants to create it, or maybe both, or a combination. Once the assets are inside this entity, the ownership, the settlor's ownership ends. The trust now owns the assets. Let's say they decide to put the farm operations inside of that trust, right? The land, the house, and everything like that. So now they're creating the rules of how to use the assets, right? They're saying, oh well, now the beneficiaries can have use of the farm. The income should be spread this way, blah blah blah, 30-30-60 or whatever, right? So the trustee manages the trust according to the rules. The trustee is like another super important role, and they are the ones that are in charge. That's what we're talking about, right? Who has the power? But they're bound by the rules of the trust. A trustee can be a family member, a lawyer, a trust company, or a combination of them all. So I got here on the notes. Critical note: the trustee is where most trusts either work beautifully or fall apart completely. And if you watched a couple of shows back, I was talking about the executor and its role into the will and the execution and the probate process, right? It can these are key roles and key decision making roles. So if you put somebody in a trustee position and they don't make the proper decisions, it causes issues and destroys the trust all on its own, right? So you need to have people that are delegated and they're properly instructed, and you probably even want to create a, a diversion, like a blend of different peoples and opinions. And that's how government should work. You know, they have in trust all the assets of Canada, and the beneficiaries are the people. And so they have the best interest of the people. But I don't know about that. Who holds them accountable? Or did they change the rule? They took it out of the trust and now they're just like, oh, we don't need to do this stuff. But anyways, and then we talk about the beneficiary. The beneficiaries receive from the trust. They either receive an income, they receive assets, or a little bit of both. Depends on what the rules were set up to be. So just a quick example, Jake might get operational control, right? The city kids might receive income from farm profits. All three are beneficiaries, just with different roles, okay? So when does the trust shine? Because we hear a lot, especially like in financial freedom, it's a tool, right? It's a tool that a lot of people don't know about either, because it's not explained. Where are you going to learn that, right? Like you either got to go. An accountant will tell you the pros and cons in a different way than a lawyer would tell you the pros and cons, right? So we just need to learn it for ourselves, or learn it on shows or watch it on YouTube. I mean, YouTube is a freaking amazing platform that you can learn anything that you really wanted to, right? But anyways, what our trusts are great at, and don't take this as, these are just my opinions. I put them together and I just wanted to put them on paper. But a trust can say, Jake gets full control at age 40, right? Or the city kids receive farm income for 10 years, right? You can write whatever you want on the rules, right? So it creates timing, certainty, right? And clarity, right? And so, and then it protects fairness, right? So like, you don't want to pass on the farm to kids that don't want to farm it, because that would be like, it obviously everybody rebels to if they don't want to. Oh, I'm not keeping up with my slides. Sorry, I got distracted. Yeah, so it doesn't clear clarity, right? And then it doesn't happen all the time, but it should just have, it should be just a plan that it's in place, because prior, it's not that the mom and dad are just making the decision on their own. No, they would ask the family, hey, should we do a trust, or should we do a corporation, or should we do a bit of both, right? Like, how do we protect our money, our sweat equity that we put so much into it, right? So protecting fairness, you can build in rules that reflect your family's actual reality, not just a math split, right? Like, fairness is not the same as equality. Equality is just like mathematical, an equation, right? You have 3 kids, you want everything to be equal, so you split it into 3. Math, right? But fairness is a little bit different, right? Like, who's wanting to continue? Who has who can we give the trust to, right? And then complexity. management, right? Blended families, the possibilities are endless. Maybe the cousin is working on the farm too, right? And so it creates this, container that helps everybody in a way, and it's creating these structured rules, right? And one of the biggest things that I learned, it was privacy. Okay, with probate, everything goes public. Everybody can find out in the courts what assets are into the estate. And if you want to keep everything passing probate, because that's what's good too about trusts, they pass the probate process. Once they're established, they're there, and obviously we'll talk about one of the cons, but they're there and they protect the taxation process, the probate process. So yes, they require fees and time and energy at the beginning before you set them up, but they that's what the calculation and that's what the math comes in. If they save you in taxes and successions and they keep your stuff private, wouldn't that be something to look into, right? Obviously, we don't have enough time to talk about trust, but this is just a 101 thing, right? Good moment. Is it? Okay, so obviously, this is not legal advice, but if you have a lawyer friend and we can sit down together and we can analyze your situation, because every situation is different, and then calculating your assets and calculating your future revenue, your income, and all this can be put down with a simple financial analysis, and then we can explore the different avenues, right? So um, and then I can suggest, different lawyers, different accountants that will create the and implement and be able to implement the plan, right? So trusts are very powerful tools, right? But I want to be real with you. They're not magic, and they're only as good as the people who run them, right? And it's it's like you see, the American Constitution was one of the greatest documents ever created because it gave people the freedom that they never had. They never had such freedoms. But those freedoms over time, it was like a trust. The Constitution was a setup of trust and assets, which is the land of the American people. And then what happened to the trustee, the people that were given the power to continue on leaving people with their freedoms, right? It got corrupted, right? And obviously we're in different times, so we can't bring back the past, but um, there is things that can happen while you have a trust on. And number one, let's talk about this, because this is what means to have a properly conducted trust. You can't have conflicts between the trustees. So, and then, like I said, you want to diversify the level of the minds, because then it becomes like a mastermind, right? Like, and if you have two co-trustees who disagree, the trust doesn't go on. It doesn't get executed. So if it doesn't, for example, oh, we need to plant the barley, and then the other guys say, no, wheat is more profitable, but barley is stronger. We're going to have a tough season. What happens? The barley doesn't get planted. The wheat doesn't get planted. And what happens to the farm? Stalls. No, we got to have the proper right decision makers, right? And so trust conflict could be a failure, right? Vague instructions, not properly writing. Like I was writing instruction manuals when I was in engineering, and you have to be able to picture a 5-year-old operating a very complicated machine. So it's the same thing. If you don't leave the proper instructions so that a 5-year-old can interpret, then you're not writing clarity. And so if you actually are vague with your instructions, it creates interpretation fights later. I don't want to bring the example of the Bible, but there's a vagueness that happened 2,000 years ago, and we're still taking those words as if they're true, but never adapted it. There's never been a new revision for the actual times. It would look definitely different, especially if you bring in the science, right? Anyways, I just went on a tangent. I don't know if you get what I'm saying, but that's good if you don't. Admin at fatigue. Oh God, failure mode number 3. Yeah, admin fatigue. The trust needs, to be administered properly, and a lot of people get stressed out or burnt out with any business, right? With any business, there's the possibility of having issues there. So, last one, no communication. Communication is key for any business, any family, any farms. You need to have the proper channels. And like I said, like we have one of the highest level of communications right now, but it actually is not being used properly, so to say. I mean, it's just my opinion, but it needs to have, like constant meetings, meetings about anything, safety meetings, family meetings. You gotta have, tractor meetings, how to use that, how to properly warm it up, man. Like there's so much that needs to be in place to really understand each other's, like I'm reading a book, Getting More, and it's just like putting yourself in the other person's shoes is the best way so that you can negotiate and reach each other's goals, right? Like whenever somebody sits down for a negotiation, is they want to reach a common goal. And it's the same thing with buying a house. We bring in together a seller and we bring in a buyer, and we want them to have the same goal. The seller wants to sell it and the buyer wants to buy it. Hello. And then there needs to be communication. So it is the failure mode number 4, but it's the very important mode. Okay, so corporation, how much time we're doing? Okay, no, we're not doing so bad. Incorporation 101. What's a corporation? A corporation is a separate legal entity. It has its own name, its own tax return, its own bank account. It's not you. Let me change the slides here. And it's not you. It's a business that you own. So in a farm context, instead of Jake's family owning the land directly, the family owns a corporation, and the corporation owns the land and operates the farm. This might sound complicated, but it unlocks something really powerful. Okay. First of all, tax savings. But I don't want to spoil it. Do I have a slide for that? Oh, trust and corporation comparison. No. Okay. So why shares versus land titles? Okay. Why do the shares beat the land titles for successions? Because shares of a corporations, well, actually land titles are hard to divide, right? And then there's different ownership rights that go with that. So it would be a lot easier to give someone shares. And then you can also structure a corporations where you have voting shares. So that means you have control and you have the decision-making power. And again, when you start the corporation, you can make those decisions just like what you would do with a trust, right? And then you can give, in our example here, you can give the kids, the city kids, 200 non-voting shares. So they just get the value, they get the profits, they get the dividends. And then everyone is owning the farm. It's just that who is controlling it, right? And then who's best to control it? Obviously, is the kid that wants to farm it, that has learned and has put the time into having that knowledge, right? He has paid his knowledge debt on the farm. Okay, so control versus value. This is the magic of the incorporations. You can separate who makes the decisions and who benefits economically, right? And you can do so much more with a corporation. And so in our case here, Jake's gets the authority, right? And then this city kids, they rip the benefits. So when you're structuring a corporation, all these, because there's all kinds of different corporation. I mean, there's a corporation for a real estate agent, right? And when are the benefits? When is the threshold of receiving the benefits instead of like not receiving benefits? And so there's so many different situations. This doesn't just apply to farmers or farming and anything like that, but as I am a former farmer and I'm also a financial associate, I want to help farmers understand more what their options are when it comes to saving money, or keeping the tax man out of your pockets, right? So we talked about, definitely got to talk to, bring into the table. When we have these family meetings, what I like to do is bring over to the table an accountant and a lawyer. And so then we can all talk together and see the operational benefits and the way that we can, each other benefit from what we have to offer, right? Okay, so what are incorporations good for? Continuity. So if Jake inherits the corporation, the farm keeps operating, right? There is no need to retitle every piece of the land, right? It's the corporation owns it. The corporation gets passed on, right? Because he's already part of the operations. He has already shares. There is lots of flexibility, right? There is, he can actually buy his siblings out, buy them out, or insure them, or whatever, right? And they can plan it in advance, right? So then there is creditor protections, because the assets are now held inside a corporation. If he was to do anything wrong or anything like that, the liability is inside the corporation, and he is only liable for what he does, and they can't take it away, especially when it comes to tax times. If the dad or the mom are indebted, and it's not a debt that it's inside the corporations, well, then the lawyers can't go after the corporations because they own the shares. They don't own the liability. So there's creditor protections, and that's why most people incorporate, to protect their assets. And then income splitting. There's income that can be split in dividends or payback, or any other sort of structure that can help with tax planning, right? So trade-offs. The trade-offs. Admin discipline required. A corporation and a trust, they both need annual tax filings, and they need proper bookkeeping and real governance. You can't run it like an hobby, right? It needs structures. It needs, discipline, right? So I'm going to go to these slides. Okay, tax filing. So both pay taxes. They have they pay in different taxation brackets, and a trust compared to a corporation pays less in taxes, and that's why it's in the income tax bracket. And or you can actually take those taxes and put it onto the beneficiaries, and then they would pay them individually. So that's how you can reduce the tax burden on trusts instead of incorporating, right? But corporations, they have their own rates, and they can de-escalate, like they can pay less taxes if they pay dividends out. And then paying dividends, once you have a dividend pay, they can actually be deducted a lot easier on your tax returns, right? But again, this definitely needs another show because there's so much to know. But anyways, let's go on the trust here in Canada. It's deemed, it has a 21-year deemed disposition rule. What that means is that every 21 years, if it's considered to be stopped, or it goes into this other, it goes into like a big market sale, and then it gets taxed. And obviously, because it'll be considered like capital gains. And this structure needs a huge planning, right? Or you can either dissolve the trust after 21 years, and then all the beneficiaries will get their portion, or you can continue it, pay the taxes off. But no matter how you look at it, you need to plan for this one, right? In comparison, the corporations, if structured properly, right, it has a lifetime capital gains exemption, right? And so far here in Canada, don't quote me, right? Like I'm just learning as well, but there is 1 million of per individual in the corporation of limited capital gains. So you don't pay on the first 1 million, and then you pay taxes at 50% on the remainder, right? So I had an example, but we can talk about it more individually before I start steering people in another way. But a corporation at this point has a little bit more leverage than a trust would. And in both cases, like I put on my slides, a farm keeps running. Yes, if trustees is ready, right? Like if the proper trustee are in place and they're ready and they don't have any disagreement, yes, the farm keeps going. Yes, in a corporation, obviously the shareholders agreements exist, so that can be controlled and moved on forward. Okay. What's next? What do we got? 5 minutes left. Oh boy. Farming kids control plus farming. Okay, so what do I got? When the person who created the trust passes, the trust itself doesn't die. It keeps, okay, so a little bit of successions behaviors here on what happens. And we talked about it a little bit, but the main ones are when the person who created the trust passes, the trust itself doesn't die. It keeps operating according to its rules. So it creates consistency and bypasses probate. This is powerful. No probate on trust assets, no scramble for authority, no court involvement. Everything gets passed on, right? So that's huge. Because when we're talking about farms or big businesses and it gets passed on, it creates a lot of simplicity. The trustee steps in immediately and follows the rules. The farm keeps running. Downsides, the rules are locked in. If family circumstances change and the trust wasn't updated, it may not reflect current reality, right? So it can be set up, like the rules can be set up if you knew this, just like the Constitution, right? Like it can be amended, right? But it has to follow, the amendments have to follow certain rules, right? And that's what uh, great. That's why I say, you know, it was one of the greatest documents ever created. But it slowly got eroded because of the people that wanted the power and not share the wealth and the abundance. Okay, so corporation and successions. Shares pass like any other assets at death through the will or via a shareholder agreement. Okay, so there's a little bit of a disagreement there, right? So the shares will go into inside the will. Well-drafted shareholder agreement can specify exactly what happens to Jake's shares, who can buy them, at what price, under what timeline. And there's also like insurance products as well. Like you can set up a life insurance on your partners, and you can set it up so that if they died, their heir get liquidity fast and the company continues on, and the other members profit and split the shares between them as well, right? So if there's a holding company structure and the shares qualify, the LCGE, the life capital gain exemption, can dramatically reduce the tax hit on death, which what we talked about. Like trusts, if there's no shareholder agreement, the corporation can end up in the estate, subject to probate and family disputes. So they need to be properly set up, right? And it takes planning and it takes a lot of knowledge, right? Like I'm just scraping the surface, right? Like I'm just saying it, you know, like in a way that I understood it, right? But it's again, it's about interpretation, right? Too, and how to use the different tools, and what I wanted to say and mention at the last one is they can also be used together, right? Like you can put a corporation inside of a trust, and then you benefit from both. But obviously, this creates a lot of financial strain, right? Because once knowledge is power, right? But acquiring knowledge from different places, it takes money, right? Like if you want to talk to a lawyer, it takes money, right? So it comes with a cost, right? Or a learning experience. And I'm not saying that anybody can set up a trust. Anybody can set up a corporation. I set up my first corporation when I was like 22. So if I could do it when I was 22 with like the basic knowledge, just following instructions, and at the time there was no, like there was the internet, but there was no like YouTube, or there was no sources. I mean, all I could find was just the internet or going to these places and talking to people and gaining knowledge, right? So knowledge is key. So we talked about the differences side by side, right? There's no place where each one is like what we talked about, the trust and the corporation. They're so tailored for what, they're not like universally all better, but they have behaviors depending on the family and depending on the accounting, depending on the operations, that can benefit. One can benefit more than the other, right? Like I just want to bring it back in to the one kid that wants to still farm. We want to be equal is math, like I said at the beginning. Equal is math. Fair is the reality of things, right? So Jake gets the voting shares or trustee role. City kids receive value from either real estate assets, insurance proceeds, or a structured income stream. Okay? So this keeps Jake's hands free to run the farm without needing permissions from his siblings. Then there is also the shared ownership with document management control. All three kids own equal shares or trust interest, but a shareholder agreement or trust deed gives Jake sole management authority, right? All the kids could own the farm. Works, but only if the agreement is airtight and the family is aligned. If that agreement ever breaks down, you have a management crisis inside a farm that needs to keep operating. Let's not forget that. Without the farm operating, there's no money, there's no income to be followed. So don't get into disagreements, before you can actually see the benefits, right? And then you can set it up so that one of the siblings, Jake, buys the farm out. And this is the common happening, is that over a time, Jake can use his profit margins to pay his siblings off over top of what the income that they already are sharing. And at the end of the day, the farm goes fully into his name, and he can pass it on to his siblings and repeat the role. And that's how multi-generational families survives, right? So all three of these options or scenarios can work, right? But none of them will be able to work without liquidity. And what I said before, and I have to cut it short because it's already the end of the show, but you need liquidity, and no matter what, you need to sit down and talk about insurance, right? And how to create, emergency funds, right? And we talked about it last week as well, right? You need to have that cash that unlocks even the unexpected. It's like expect for the expected, but also expect for the unexpected. So I just wanted to go quickly through the questions that should be asked at a accountant or a lawyer's office, and then we'll end the show here. But if you had a farm, what's our number one risk right now? Tax, fairness, control, or liquidity, right? Try to maintain that risk as low as possible. What happens to this farm tomorrow under our current state setup if I'm gone or disabled, right? How do we prevent deadlock while the farm still needs to run, right? We don't want this business to stop if there is a deadlock or decision making that it's important. And that's why meetings are so important. Annual general meeting or meeting every week, right? Where does the cash come from so we don't sell the land under pressure? This is the biggest one, right? If whatever setup we decide to go to, where's that cash coming from, right? Are we saving it? Are we investing it? Or are we buying insurance? And then would a trust help our family? And who would realistically be the trustee, right? So before even creating this trust, now that you have this knowledge, you have to know who can take on that role. Same thing with the executor. If you haven't watched that show, it's a couple of shows back. It's about the will and how to prepare it and who to select as an executor, right? Who would incorporating help? That's a question to ask both, right? And that depends on the accountant. If the accountant says, well, the income is so high that now you can enter a lower tax bracket and create shareholders and you can protect your succession, then I would definitely suggest to incorporate. But it all depends on the actual cost because it takes money to have a corporation, right? It's a different tax filing. It's not something that anybody can do. Obviously, some people can do it if they pay their knowledge debt. And what admin does it actually add year over year, right? The administration cost. How do we treat the non-farming kids fairly without punishing the farming kids? What's our disability plan? Not just death, right? Like I talked about it before. Do our shares qualify for the lifetime capital gains exemptions? And what do we need to do to keep the eligibility? What's the 90-day action plan? Break down every single plan in 90 days, make it more achievable, break them down to the point that it's like, okay, I can do this, right? Instead of like planning some crazy expectations and then not leading up to those expectations. Some people say aim high and then you'll hit the target. But it is true as well, because there's always friction, right? Like when you're pointing an arrow, I did archery for a while, but when you're pointing an arrow, you don't aim it to the target because the force of gravity is going to pull down your arrow. So you're going to aim higher and then it's going to bring it down. So you have to know the forces that are pulling that arrow down in order to understand when you're going to hit, how you're going to hit your target, right? Well, thank you for tuning in this long. It's the end of the show. I hope you enjoyed it. I hope that was instructional. Again, it's a disclaimer. I am not an accountant. I'm not a lawyer, but I try to help people achieving financial freedom. And this show is about farmers and helping farmers achieve financial freedom. It's one of my passions. You tuned in. I'm Rico. Thank you for tuning in. Next week it will be episode 31. Stay tuned. Every week I do 1 hour instructional videos, and we talked about managing finances, and this show was about trust and incorporations. So if you like the show, please leave a like, subscribe to the channel, give me a shout. I'm always open. My phone is on. My phone number is 236-457-4230. It's out there. Get in touch. And again, thank you for watching and stay tuned. And I hope to see you next week with another great show. Have a good day. Oh, it's a day. Yes, 9 a.m. Pacific. Okay. Well, and sorry, I apologize for the earlier technical difficulties. Okay. Bye. Have a great